Nigeria's President Muhammadu Buhari scheduled to present the 2017 budget to the joint session of the National Assembly. South Africa's inflation hits a 6.6% high as the IMF delivers staff report on the state of the economy. Plus, a nail-biting trading day around the world as investors await U.S. interest rate decision day. Thank you for joining us here on Business Incorporated, live from Lagos, Nigeria. I am Bosin Omofaye. Let's start from home. Nigerians today await the formal presentation of the country's 2017 fiscal appropriations by the President Muhammadu Buhari. The event scheduled for the joint session of the upper and lower legislative chambers was initially billed for midday but later shifted to 2 p.m. local time. That's about 30 minutes from now. Africa's largest economy plans about $23 billion fiscal budget for next year with a growth outlook of 2.5% and oil benchmark of $42.50. Kemi Awuyemi is our financial analyst and the chief executive officer at ProShare Nigeria here in Lagos. Femi joins us via telephone to band around those 2017 budget proposals. Good afternoon, Mr. Awuyemi, and thanks for coming through on the program.
Thank you very much, Bosin. Nice to be here.
Yes, thank you very much. Now, what do these proposals tell us about the overall 2017 budget package by the Buhari's administration?
Well, the president understands that he has what you call a very, very significant litmus test. The litmus test is that this is a make or break budget for the president. Most significant, not just the budget, but most in terms of his economic plan. There has been so much that has happened, both within and outside the control of the government. But at this time, we need a comprehensive plan that allows the budget 2017 to be a catalyst of sorts to address most of the hydra-headed problems we have sleepwalked into. And as such, the expectation is that we are looking for bold, visionary statements, but we are also tempered by the reality that it may just be something that can deal with stop the rot, and then let us see how we can start off on a smarter note.
Now, what do you see? Do you see any significant difference? Do you think, if any, will be between the currently running 2016 budget that will expire by May next year and the new one being proposed by the administration? Do you see in the details yet in the proposals, is there any difference, if any?
Well, if there is anything we can pick up, the 10-point plan by the Minister of Finance would clearly indicate the tone of where they're going. That has not been, should I say, inspiring, as it were, as you can see from the feedback. It basically sought out to deal mostly in the 10-point plan with the government's challenges, which again is not something that was not expected. What we, however, are worried about is that the performance of the 2016 budget is abysmal. And as such, what you expect to see in 2017 is how they can bridge the gap of what they could have done in 2016 and quickly move into 2017 in such a way that would help. How they can do that with the state of finances is where we are hoping that the president can provide some assurances in terms of some critical issues. And there are some few questions that we have, which we are looking for answers to.
Well, let's wrap it up on this very question. This is President Buhari's second budget, and you've talked about this very briefly. Do you see these budgets as capable of delivering on the key economic redirection, revival, and inclusive growth that everybody's talking about?
Well, the budget should reflect how you understand the economy. The decisions taken in 2016 up to date suggest that there is coming to grips by this administration of the enormous challenges facing Nigerian economy. Now, given that they are now into their learning curve phase, there is not too much excitement in terms of what 2017. It may not significantly be different from 2016 budget. It will mostly be driven by a desire to move towards capital expenditure, a desire to reduce recurrent expenditure. But the reality of it is that the president has a bad hand. He's dealing with like you talk about in a poker game. But in terms of the Nigerian economy, do we look forward to a 2017 significantly different from Nigeria? Yes, in terms of the fact that there will be upticks in the GDP, we will slow down the decline. But there is nothing significant that will show you where the new change is coming from. It's about numbers. The numbers are not in the favor of the Nigerian government.
Femi, we await the president to make the presentation within the hour, if that happens still today. Thank you very much for talking to us, financial analyst and chief executive at ProShare Nigeria. Now, the stock market here continued this Tuesday rally today, regaining the 26,000 mark on the composite index. About an hour ago, that index was about 0.5% to the north. In South Africa, that's the largest stock market on the continent, the JSE. Started today negative, but since turned positive, trading above 15,700 by 0.84%. Meantime, the public offering and private placement of Oberland for food industries debut on the Egyptian Stock Exchange yesterday. The public offer was 24 million shares and 56 million shares of private placement. The shares are priced at 9.68 Egyptian pounds each. You can see the Egyptian stock market lackluster, 0.07%. The Kenyan Stock Exchange yesterday index was what you see there in the middle column, 131.87. That's for the stock exchange, the Nairobi Stock Exchange index. Moving up quickly and look at the Middle Eastern markets following the European bourses in negative territory on Wednesday as global markets await U.S. central bank's interest rate decisions. All Middle East major exchanges were in the red most of today as metal prices rise and oil prices decline. Check out a summary of the Middle East trading day as we captured them about an hour ago. The Saudi market, which is was the largest within the GCC, was about 0.5% in the red. The Dubai financial markets was down more than 1.15%.